Welcome back, everybody, to another cryptocurrency news article. This one comes from Cointelegraph, and, well, it's that time of the year again. Can't believe it's already been another trip around the sun, but the IRS reminds taxpayers of crypto income reporting ahead of the 2022 filing. So, yeah, tax season's here. The IRS recommended that you check the yes boils down to receiving, earning, transferring, or selling cryptocurrencies for any monetary benefit, including mining and staking. Now, this article also goes over why you would need to not click that yes button, and that's really only for if you held your own cryptos all year, especially on a non-custodial cold storage wallet where you have your own access to the seed phrase, nothing else is linking you to it, and say you transfer, and the only time you transfer it was between other cold storage devices like that you own. Those are the only reasons why you would have to say no. But say you actually used other accounts, like say centralized entities, for transferring, selling, exchanging, and storing your stuff, then you will most likely have to check yes. So yeah, that one definitely refers to anything like if you use Coinbase, KuCoin, Kraken, Binance, Bitrue, Upbit, Genesis. There's just so many centralized exchanges out there, but if you use those guys, you will most likely have to click yes and follow the tax rules. So follow the tax rules. Do not try to fight them. If you owe money, pay the government. It's not worth it. But yeah, let's go over this article and learn about this. Now, with the deadline approaching for filing the 2022 federal income tax return, the International Revenue Service, aka the IRS, is an enforcement agency of the United States federal tax laws, released a list of reporting requirements for the general public dealing with cryptocurrencies. Now, until 2021, the IRS used the term virtual currencies as an income tax related reporting form, which have then been updated to now digital assets. Now, all U.S. citizens must answer questions about cryptocurrencies regardless of whether they engaged in any transactions involving digital assets. Now, the question about digital asset income features are in three forms. You got the 1040, you got the individual income tax return, the 1040 SR, which is U.S. tax return for seniors, then you got the 1040 NR, which is the U.S. non-resident alien income tax return, and they all ask at any time during 2022 did you A, receive a reward or award of a payment for property or services, or B, sell, exchange, gift, or otherwise dispose of digital assets or a financial interest in a digital asset. So like dispose of, say you purchased cryptos on Coinbase and you move into a self-custodial wallet. So you could say you disposed of it, it's no longer tracked, it's all in your control now. But well, all tax filers are required to answer the above question with yes or no. The IRS provided 9 instances when one must check yes as shown below. So received digital assets, transferred, received new, received, disposed, sold, otherwise. So they had 9 reasons why you need to check. So most likely you will need to, though. The above recommendations boil down to receiving, earning, transferring, or selling cryptocurrencies for any monetary benefit, including mining and staking. And in addition to checking yes, eligible taxpayers are required to report all income related to the digital assets. Now, the only instance when one can check no in the filing is that if they have been purely holding the crypto asset, transferred assets between wallets that they own, cold storage wallets, aka Trezor, Ledger, then self-custodial wallets, Exodus, Divi, there's so many out there, I can't name them all. But they owned or purchased cryptocurrencies against fiat currency. So yeah, if you did it between those, you're fine. But a bill recently pitched during the first session of the Arizona State Senate in 2023 proposed having Arizona residents decide amending the state's constitution in regard to property tax. As Cointelegraph reported, the SCR 1007 bill went through 2 readings as part of the state Senate's calendar on January 19th and the 23rd. So yeah, bills are still worked off and made for cryptos, holding it, mining it, because it's crazy. In some states, you never know. It still could be illegal to hold cryptocurrency or mine it yourself. But yeah, just pay attention to the tax rules and guidelines. Follow everything they say. It's simpler. Again, don't fight it. There's like a funny old Batman like cartoon, the animated series, like joke with the Joker. Even the Joker pays the IRS because like his account was like, Joker, you got about $31 billion here. He's like, what? that's too much. Then he like goes to the money, grabs it all, and is like, here, give this to IRS. I'm no fool. I'll take on a guy in a mask, but I'll be crazy to take on the IRS. So yeah, just pay your taxes if they are due. Like don't try to cheat them out. It's the safest and easiest thing to do. So yeah, I hope you guys did enjoy that article, and if so, hit that thumbs up for me. Subscribe to the channel. Till next time, the Crypto Sherpa is out.